Welcome everyone to another new week of the CFO Swinger Watch. I hope you guys enjoyed last week's newsletter, but unfortunately we did not have the TA video. So welcome back to the TA video, everyone. All right, so let's go ahead and start with the markets. SPY. So SPY on Friday was very, very, very weak. All right. And we're at that point where we're about to have our death cross where the 50 SMA, this dark blue line right here, is about to cross below my 200, this yellow or golden line. All right. And I've been telling you guys to watch out for that because in the next few weeks, we will see this cross, even potentially this week, depending on how the market reacts to when Jerome Powell confirms our first rate hike and by how much they want to increase the rates. Okay, so we will be going over that live as the FOMC meetings go on this week. Now, we did end right at the support of 420. So the thing that I really didn't like on Friday's close, if I was a bullish guy right now, I would not have liked the fact that we came back to the 420 support again so quickly. Because 2 weeks ago, we had a very, very good bounce and a good follow-through movement showing potential reversal. And then last week, we came back down to 420 again, bounced, and after a couple of days, we came right back down to 420 again. So that means sellers are very, very heavy here, and they're selling every single time we hit a level of resistance. When we reject a level of resistance, all right, and even if we do bounce strongly, sellers decide to come in again because that's when the opportunity is there for them to short. So now the fact that we've actually ended right at 420, right, there's a good chance that we can come back down and hit 407.50, which I've been waiting on for weeks. So if we hit 407.50, then I'm going to expect a bounce, an actual big bounce that can potentially give us a nice follow-through movement, all right, instead of that usual rejection after a big bounce that we saw 2 weeks ago, and potentially reverse. All right. Now, as a bearish guy, so now I'm switching the perspective to bearish. If I am extremely bearish, I'm going to expect us to break below 47.50, all right, where the price will most likely not care about all this volatility here, okay? And we're going to break down below 47.50 and then come all the way down to 400 where we will, oops, there we go, continue to go lower and eventually fill in the gap that we see right over here. Okay, so this is a gap that we've never filled. So in order for us to fill that gap, we need to come back down to 400, which is a huge psychological level where buyers have held this level multiple times here. So if we break below 400, we will fill in this gap finally. Okay, and mind you guys, this gap was made in April 1st, right? April 1st and April 5th. Okay, so that's quite a long time ago. It's almost a year now. So be mindful of that. All right. Make sure you guys are hedging. Right. The markets are still in the downtrend, but this week is huge because of all the macro factors and especially the interest rates. Right. That may be the major headline. But so far, the major headlines have been the Ukraine invasion and war. All right. So let's take a look at QQQ. So QQQ, we officially broken down this head and shoulders pattern, which is very bearish, right? Like I said, we've been looking at this for weeks. We have our left shoulder, our head, and then our right shoulder. And our neckline here, our neckline support, which is our descending support trend line here in red, okay? We finally broken below it, and we ended below it. And for the fact that we did this just shows us that there is a lot more selling pressure as well in QQQ. And again, all right, let's go over this one more time. QQQ already had its death cross. So the downtrend for the long term is confirmed. Now, if you take a look at the weekly time frame, okay, let's take away all of my drawing here. For most of 2020 and 2021, we were above the 50 SMA on the weekly time frame. Okay. And now that we've gone below it on the weekly time frame, right? Expect us to use the 10 and 21 SMAs. My red line here, right? And then my light blue line is my 21, and my red line is 10. So expect to see the 10 and the 21 be used as resistance SMAs, because throughout 2020 and 2021 and a little bit of 2022, we've been using them as support. But since we lost it, okay, the 10 SMA and the 21 SMA is going to keep the price in check to the downside, right? And there's something that's very different compared to this dip that we had in 2020, okay? And this dip that we're currently seeing in 2022, all right? First off, the velocity of the downturn, okay? And the velocity in 2020 and early 2020 was very, very quick. We moved to the downside very quick as we sold off it with this virus fears, right? Because we didn't have a vaccine for it. And so people were thinking that the economies will all crash, and there'll be global panic and mayhem, and the markets were extremely, extremely scared. Now, if you compare it to the dip in 2022 that we're currently experiencing right now due to macro factors in the economy, look how slow this is, right? It's a very slow and controlled downtrend. And that's what we usually see in a bear market, right? We have crazy bounces and then crazy levels where we see rejections, where a lot of sellers come back in after that big bounce as we continue that movement lower. And so we have a very controlled movement to the downside. And if you guys take a look at this huge bull run that we had in the last 2 years, it's also a very controlled uptrend. And so this is what we like to see in a uptrend. And if we invert that, okay, if you take a look at the opposite perspective, using the same parameters, in a bear market, in a downtrend, we want to see that. We want to see that controlled movement to the downside, right? Lower lows, lower highs in a bear market. And in the opposite, in a bull market, we want to see higher highs and higher lows. And that's usually in a controlled fashion. And so that's the major reason why we've been seeing continuous weakness. And every single time people try to buy the dip, they get shaken out. Okay, so keep that in mind as we continue to go through, heavy amount of selling and heavy amount of buying as well. All right, as a lot of people are trying to buy the dip, but they continue to fail, which is why when they sell, they contribute to the selling pressure as well. Okay. Now, I want you guys to look at VNQ next, all right? So if you guys haven't read the market summary, read that market summary first, okay? So VNQ is looking at the real estate, right, and in the US. And we're just taking a look at the weekly time frame. So I'm not even going to do the technical analysis here, all right? If we just take a look at the weekly time frame, look how strong it is, right? We came back down, retested the 50 SMA, and we bounced on top of it very, very strong. We retested and came back above it. This is very, very different from QQQ, okay, and SPY. So VNQ is looking to be very, very strong. And even on the daily time frame, okay, we got a 10 SMA crossover above the 21. So if we're able to break above and continue to stay above both of my 10 and 21 momentum SMAs, we can actually see an inverse price action compared to the rest of the equity markets like SPY and QQQ. Okay, so make sure you guys are watching out for VNQ because so far I'm liking what I'm seeing. We're forming a nice base here after a nice sell-off with the rest of the market. Okay, that's what happened in January and February. And then in March, the rest of the markets continue to sell off, but in VNQ, in the real estate market, we actually continued to bounce, and we sustained the bounce that we saw 2 weeks ago. Okay, so for VNQ, I think there's a good chance that we can see an actual inverse relationship to the overall markets. All right. I'll give you guys more updates in the CFO Discord if I see anything significant in VNQ. Okay, so let's take a look at our first name, Dollar Tree. All right, so Dollar Tree has been seeing an incredible amount of institutional and hedge fund buying. How do I know this? Well, just simply look at the chart, right? We've been consolidating for multiple months at near all-time high levels, okay? And now, last week, we actually made new all-time high levels when we went above 153.98, okay, on this candlestick. So with that in mind, okay, the only thing that I'm not liking about the LTR right now is that we're making an ascending wedge here, okay, or an ascending triangle, not triangle, excuse me, an ascending channel or wedge. It really doesn't matter here. The only thing that matters is that this is a bearish chart pattern, okay? So I would highly, highly advise you guys to wait until the price comes back down, breaks below, and breaks out of this ascending wedge or channel. And once it does that, I want the price to retest supports that we've been looking at in the previous weeks. So if we're able to come back down to around 144.50, around 144, okay, hopefully we can see a nice bounce. If not, there's a good chance that we can come back all the way to 132, which was our previous level of resistance that we broke out of back in early February here. Okay, so this is a major level that you guys need to be watching out for if we actually break below this ascending wedge or channel and continue to fall down. Okay, so hopefully that doesn't happen because of the fact that this is a very, very good chart. It's been moving inversely to the market, all right? And it's been moving very strongly, and there's been an increased amount of volatility after earnings came out as well. So, there's a good chance that we can actually break above and negate this ascending wedge or channel here. But make sure to be careful here and have a good stop loss set if you decide to get in at a potential bounce around 144.50 or 144. Okay, so next one is PGR. PGR is the same story as the LTR. Hedge funds and institutions have been putting their money in this name as we continue to see this accumulation phase going on with this stock, right? So we're still in this big macro bull flag or bull pennant here. Either way, it's the same thing, right? They're both flags. And on Friday, we decided to have a little tiny peak above this descending level of resistance on this pennant or flag. And we did close a little bit above it, but eventually the market continued to sell off during power hour, and it affected this stock as well. Now, this stock is very important to watch out for this week because the Fed's decision on inflation, right? In order to fight inflation, they need to raise interest rates. So PGR will be an interesting name to look at this week because they're a company that does well during inflation, right? And based on the price action, you guys can obviously tell that hedge funds and institutions have been prepared since last year, right? And they're probably in before this big breakout between early December into early January, right? And we can also see evidence of that right here, right? Where the price literally went nowhere and just continued to move up and down in a tiny, tiny price range, all right? So make sure you guys watch out for this one because if it breaks above this pennant bull flag here, specifically 107 or 108, we can see another revisit to 110 and above into all-time highs, all right? And then the last one, CSX. Okay, we saw a big volatile movement last week. All right, this really surprised me because I don't tend to see this really big volatile price action off of railroad names because they are quote unquote boomer stocks, right? But if you guys read the analysis I've done, you guys will understand why there is such a big price volatility going on with most, if not all, railroad names. And specifically, CSX is showing a very good opportunity here. First off, we're starting to see a very nice base here. Okay, we decided to break above it once last week, but it proved to be too volatile and we came back down to earth. Okay, and we're now right back inside the base again. Okay, this kind of reminds me of Macy's here. And if you guys remember Macy's, take a look at I believe 2 weeks ago, I think 2 weeks ago, last week, where I posted Macy's in the newsletter. Now, CSX here, okay, the one thing that's different about Macy's here, okay, you know, let me just show you guys, right? So Macy's had a nice base, okay, just like CSX here, except Macy's never broke out about the base, which is why I'm liking CSX better here for a long for a long entry, because of the fact that we've had evidence that buyers were present above 35, which is the base resistance here, and decide to break above 35 cleanly. Okay, so if we're able to come back above 35 here, it'll be great for us, well, buyers, because if the buyers are still present at 35, they will most likely come back in and buy up the price above 35 again. Okay, now watch out for support around $33 because on the weekly time frame, if we come back down to 33, there's a converging point of this very, very big ascending support trend line that we've been holding on CSX for the last 2 years. So if we break this trend line, it's over for the stock. It will most likely start a new downtrend. Okay, so 33 is a very, very significant level you need to watch out for and set your alerts at 33, because if we break below 33, that could be a great short trade that you guys can take as well. All right. Okay, so that's it for this week. I did not have a cryptocurrency pick for you, but hopefully there will be a cryptocurrency pick next week as I look back into some crypto plays. Okay, so have a great rest of your night, and hopefully this video gets processed on YouTube. Thank you, everyone, and I'll see you guys tomorrow morning. Good luck trading.